My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome back to Property Profits Podcast. I'm your host, Brace Kaminsky, filling in for Dave Dubois. And have you ever wondered how a nurse anesthesiologist transitioned from focusing on hourly income to reaping passive earnings? Well, today, my guest, Joshua, I'm going to take a shot at the last name, Condado.
Yeah, that's it.
I'm sure. Perfect. There you go. From All Day Investments, he's here to share his journey of leveraging real estate to achieve financial freedom, which is what life is all about in real estate investing. Welcome to the show, Josh. Great to have you here.
Yeah, thanks for having me.
Yeah, so the passive income to financial freedom, it's like the textbook move, but tell us a little bit more about what got you started in real estate, the book, the seminar, what was it that tipped you into the game?
I would say it was more than just one thing, just kind of seeing, I would say probably one of the first things is just seeing. So I mentioned before we hit record is that I have a couple cousins that have been on this show, seeing what they were able to do in real estate, just seeing that and basically wanting to be a part of it. That would be one thing. Another thing is my dad is also a CRNA. It does nurse anesthesiology as well. And I see him working as hard or harder than I am working right now. And I wanted to set myself up for my future before I got to that point. I didn't want to be forced to work overtime. I didn't want to be forced to do anything, especially at the age of, 60, I think he is now. So just trying to set myself up for a better future.
So moving from that hourly, income to passive earnings, can you kind of walk us through that mindset shift? I mean, a lot of people, especially in the medical field, are always talking about burnout. They're like, I don't want to have to do extra time. I want to be able to have something in my head that says, you know what, I don't have to take that shift. I can just do what I need to do, and I have something else that's working for me. So tell us a little bit about the mindset shift to going into investment and then the initial steps that you took.
Yeah. I mean, it's a challenge, and it's something that I've struggled with and struggle with now, even because you can go work an hourly wage of $100, $200, depending on what you're doing. And you can calculate like, oh, I wanted this trip and I have to work this much to get to this trip, save up, whatever. So it's addicting. And I found myself in that trap and was in the middle of burnout myself. And I wanted to just escape the burnout, really. And burnout is, especially, I don't know what it's like up in Canada. Here in the US, it's huge and it's multifactorial, but one way is because there's such a shortage in hospitals. It's easy to pick up the extra shift, the extra hours, and it's good money. And once you start doing it, it's addicting. You get used to the higher income, and it's hard once you're in it for a certain amount of time, it's hard to get yourself out because you get used to the extra income and you can't bring yourself back. And that was something that I even struggled with. And now that I've been able to cut back a lot, it's almost like a relief. Like, wow, I can actually enjoy my job in the hospital. I don't know if I ever want to fully leave the hospital. Like, I enjoy what I do, but I want to be able to say, like, I'm going to work this much. I don't have to work anymore. I'm going to spend the rest of my time in real estate or with my family or in other ways. I just want to have the choice of what I'm going to do with my time.
Yeah, and that is the thing, like, where you get addicted to the income bracket. You're like in a false income bracket because really you're now like sold into maintaining that means maintaining those hours.
Right. And anybody can make double your normal salary if you work twice as hard, but
well, twice as much.
Or twice as much. Yeah.
Sleep in a closet, go back to work, stay and pretty much live at the hospital. So what were the initial steps that you took to kind of break free from that cycle?
I'd say the first step was just education. Like I've been so many different podcasts, your podcast, Bigger Pockets, Best Ever. There's so many podcasts out there with tons of information, and it's all great information. So that was step one, was just binging educational content. YouTube has a lot of good stuff.
Yeah.
And then step two is just talking about it. I mentioned earlier that my business partner is Colin. He's my brother-in-law and my sister. There's actually three of us. Just talking about it. We talked about it for a long time before we bought our first one, and we like did scenarios and different situations, and then finally decided to put our money together and buy our first property.
So what had you diving into the whole mobile park space?
So that wasn't our first real estate deal that we bought. We bought some single families, some
Yes,
burrs,
maybe some
did
duplexes, triplexes, but then at some point you're like, where's the cash flow?
a
Where's this
100%.
passive money that people have been talking about?
Yeah, we had probably five or six properties at the time of our first mobile home park purchase, and weren't making that much, an extra $500 a month. That's not going to change anybody's life a whole lot, at least.
No.
Um, so our first mobile home park, my cousin, he does primarily mobile home parks, and he was looking at this deal, and he gave me a call. He's like, "Hey, this looks like a really good deal. Take a look at it. You might want to buy it." And my initial thoughts, like, obviously, why don't you want it? Like, you should get it. And I'm not really even sure why. I think it was just out of his market. But we looked at it. It looked like a good deal. We didn't have a ton of liquid capital at the time, and the seller was willing to be creative, and that was why we ended up getting it. We ended up buying it creatively with bank financing mixed with seller financing, and came out of pocket. I think it was a total of $1,000 for that $600,000 mobile home park.
Wow. How many units?
There was 16 on it when we bought it. There was room for 20 homes. Currently, there's 18 homes on it. Still getting it to fully occupied. We've had it for 2 years.
So, the whole vendor take back conversation, was that new to you when you approached it, or had you already been educating yourself on that before you went into the space?
We were familiar with it, and there's a lot of quote unquote gurus online that make it seem like it's really easy. There's a lot of sellers that are willing to seller finance,
Mhm,
but the terms are not really even worth it. Um,
mhm.
and there's a lot of sellers that are un um, unfamiliar with it, and it just takes a little bit of education. And there's a lot of sellers who know exactly what it is, and they're just like, no, I want all my money up front.
Yeah, I want
Um,
the cash. I want to sell.
right. Yeah. So I think a lot of people make it seem like it's way easier than it is. This one actually was pretty easy because, like I said, my cousin kind of already had it pretty well teed up for us. Like
Mhm.
sellers were willing to carry some of this. Give them a call.
Yeah, and that's the interesting thing that people don't quite give credit on the mobile home park space. A lot of these owners bought that way, so they're familiar with selling that way. Like they got into
Mhm.
it the same way you're getting into it, and they're like, "Yeah, I'll just give the guy a note, and I'll get some passive cash flow for 5 more years or something, and we'll sort it out when he's got it sorted out." And
Yeah.
it's not like this is going anywhere. It's a mobile home park, so.
Right.
Um, leveraging debt for cash producing properties. Um, what sort of like personal finances and sort of things like that did you have to put out there versus like the no money out of pocket kind of deals?
Yeah. So talking about my kind of my background, I'm a nurse. I do anesthesia here in the U.S. That and both of my business partners are both nurses.
Hmm.
So I don't know about recently, but there was a study done about, I want to say 5 years ago. I don't know the exact year it was done, but it was recently, where nurses are the most trustworthy profession in the US. And so when people find out that's what we do, I think there's just a tendency to kind of trust us and to know that we have everybody's best interest in mind.
Hmm.
So that was part of the conversation. That and the fact that we had already done probably 5 or 6 deals in the past, kind of building up our own portfolio. The seller could see that we were in the middle of it. We've had success in real estate before, and he was willing to take a risk. And the fact that we paired it with bank financing, he got a big payout. He got 80% of his payout day one, and then he financed 20%. So now he's just getting, however, it's a lower payment, but he's getting his monthly payment still.
There you go. So, raising capital usually is something people have to start getting into once they've started, maybe they've exhausted their own finances, but they're also, when you start looking at larger things, you're like, there's no way me and my friends are going to put together 10 million. So we're going to have to start using other people's money. What sort of
Mhm.
tactics have you found effective in securing investment funds for your real estate ventures?
Yeah, so it's that's been a challenge as well. I know I talk about these people who make it seem really easy online. They're like, oh, if you have a good deal, the money will show up. That's I wouldn't say that's always the case because you have to be talking about it to the right people because not everybody just has 100 grand to invest with you.
Yeah.
But I mean, and to their point, just talking about what you're doing and these deals and how well they're doing and performing,
Mhm.
just to anybody, even though it might not be somebody who can invest with you, they might know somebody who could, and you'll become the person that people know are doing deals and having success.
Yeah, just talking about it constantly so that it catches the right ear.
Yeah.
What are you doing in the more like proactive thing? Are you guys, putting out social media, blogs, really trying to engage your personal audience to try to, capture some of those leads?
We have, yeah, social media is it's new to us. I say I'm a old man with, with the young body, I guess. I don't know. That's kind of a joke, but I was very anti social media for a really long time, and it wasn't until last summer when we started thinking about raising funds. I was like, oh man, I guess it's something that I have to do. It was more of a business decision than it was for anything else. So
Hmm.
we have been a lot more active on social media. My sister's working on a newsletter, and we have a few other things that we're kind of working on and cultivating, but it's taken a while for those to build up.
So yeah, social media especially, it's got like a runway, but I always look at it as it's like all ad spend is a money pit, but all like social media or branding is compound interest. You set these things
Mhm.
up and they continue beyond the initial like deployment, right? So
Yeah.
when you look at your biggest successes in real estate, how can
Mhm.
others replicate your approach to, first of all, leveraging debt and acquiring these cash flowing assets?
So our first deals were not attractive deals. Like we bought the $35,000 house that needed a full gut rehab. Our first two properties combined were about 50, see 35 plus $23,000, whatever that is. Those were
Mm,
our first two deals, and they were not sexy deals. They were not deals that most people would jump at. But it got our foot in the door. It gave us a ton of knowledge. We didn't make it. I mean, we made money on both of them, not a ton of money, but the amount of
mhm.
knowledge that we gained from them was where we kind of got our kickstart. So it's purely a volume game. Like everybody always says you make 100 offers. If you get one or two deals out of 100 offers, that's a
It's a decent
success.
ratio. Yeah, that's the
Yeah.
ratio,
Where
100 to 3 to 1.
Whereas when you're starting out, like it's pretty overwhelming. And you get a bunch of no's from your low ball offers, and it's pretty disappointing, and you kind of get a little bit
Yeah, you always think that
down on
that
yourself.
first, you think that that first offer is going to go. You're like, this is the one. Even though
Right.
I'm only on offer three, this is the one.
Right. Well, and then you get down when
Yeah.
you don't get it, and then you almost are a little wanting to bid higher because you're so anxious to find your first couple deals. You almost bid probably more than you really should. Instead of bidding on 100, you probably bid a little higher on your first 10, trying to get one faster. So
Yeah.
that's something that I think a lot of people fall into.
Yeah, I remember I had an acquisitions assistant. He got super excited about this deal. We could pay pretty much what they wanted. And we put the offer in and it came back, oh, we didn't get it. Someone else paid less. And he's like, I don't understand. I'm like, well, their offer was cleaner. There's more to an offer than the price. There's conditions, possessions, deposits, terms, and it's a multifaceted, you know, paperwork. So, don't get bent out of shape. That just wasn't for us. On to the next one. On to the next one. So,
Right.
what's the future plans look like? Where do you see real estate investment journey heading, and what advice do you have for people looking to follow this mobile home park path?
Yeah. Well, since we bought our first mobile home park in 2022, that's been our sole focus. Granted, there have been some other deals that we've looked at, just haven't pulled the trigger on them because mobile homes have been so much better than all of ours at this point. And we still have one of our first single families, but we've sold off everything else, just focusing on mobile home parks. I'm very bullish on mobile home parks. There's a lot of these that still have like the original ownership, either the person who developed it or it's still in the family. So there's a lot of upside to them, like whether it's rents are just way below where they should be,
Yeah, they're
or
just letting it ride.
yeah, there a lot of them don't have any debt on them anymore, so they can be very creative with purchase terms if they're willing to sell or finance or carry part of the note like we had in our first one. Um, and then I see a lot of private equity coming into it, which is usually a good sign because they wouldn't get into something that is a huge risk, or at least I, I see that as a
Yes.
good sign.
Yeah, it's a good sign in this in that you're on to something, but it's also they're on to something now too. So you're gonna have to start raising more capital because what's interesting
Mhm.
about private capital, the hedge funds, etc., is they kind of set the bottom. You know, they set the bottom buy price. So if anything goes below this, and let's say you're waiting for it to go to this line, but they've set the like buy trigger at this line, like you're gonna be waiting forever because they're buying everything above that threshold.
Right.
So, um,
Yeah.
yeah,
What
I mean,
and
it's
then
the game.
I mean, that's part of the strategy also is get as many as we can now because private equity is setting the purchase price higher. So anything we already own is going to be valued at a much higher,
Hmm.
multiple.
Hmm.
And a lot of these current owners, they're very traditional. Like one that we've talked with this one seller, we don't own this park yet, but he said to our face, he's like, I like you guys. I have a lot of offers on this place, but I want to sell to you guys. So let me know when you're ready. So it is kind of a good
Nature
old,
business. Yeah.
yeah, exactly.
And then, yeah, you could look at it and say, okay, institutional buyer, try to be as smooth as me in the family owner type deal. So I
Hmm.
guess you still got an edge in that regard. So, um, just more mobile home parks and if someone was thinking about getting their first step into that business, what should they do?
I would. So when we first got started, we pulled a list of every single mobile home park in Wisconsin, which is where I'm based.
Hmm.
Called every single one of them. There was, and it kind of goes back to it's a numbers game. There's almost 1,500 of them in Wisconsin. Called every single one, and we got, I think it was one deal. We purchased one mobile home from that whole list. And granted, we're cultivating it, so we're going to continue to follow up on some of these that were ready or not ready to sell, but thinking about it. So we'll have our foot in the door when they're ready to sell. But it's a numbers game. That's a lot of phone calls, a lot of cold calls to get one
Christmas
deal, two deal.
cards and fridge magnets and postcards and start sending them hey, I saw this vacation pamphlet for a cruise I thought you might enjoy. Let me know if you're interested in selling. You put the pamphlet in the letter, send the letter, the old man opens it up, he's like, a cruise, sell my park.
Yeah,
Because you gotta
definitely.
you gotta do something to separate, that's the biggest challenge in American real estate is it's if it's easy for everyone to get that list, like how long did it take you to get that list and start dialing? Probably bought it on
Uh,
PropStream and
yeah, a couple
went through the
weeks.
online thing and
Took several months to get through the whole list.
but I mean to
Um,
get it, like how hard was it to actually get the list of people to call?
oh, not that hard. Yeah, not that hard. So a
Exactly,
lot of
right?
right.
So it's like if it's the difference, the work is what it is the difference. Someone's
Yeah.
actually got to do the dials after, but um
Yeah.
not
And
that
I'd say if you can actually show up to some of these properties, it's not really time efficient, but as we were talking about before, like a lot of these people, like if you can shake their hand, they'll take a lower price or because they
it's
like
the
you
extra
and because
mile for
you're a
you.
good person.
Just driving around in a camper, show up, never come home, just keep doing every 1,500 stops. You could
That's
do it.
right.
It's like the door knocking of the business. I
Yeah,
had a
driving for
guy,
dollars.
well, a friend, he started a scrap business in the prairies here in Canada, and they literally would just drive around farmers' fields. You drive for hours to get to one field and try to buy all their old machinery, right? And if no one drives out there, then it doesn't happen.
Yeah.
So, yeah, a very interesting stuff. And one of my favorite questions always is the secret sauce. What comes easy to you that other people find difficult to do?
Oh, I don't know. A lot of the stuff that is easy for me now was definitely not easy in the beginning. So
Right.
I guess just continuing to do stuff that's hard is something that comes easy to me. I guess I don't know.
There
Like
you go. People
I guess
people kind of like think about it and then they always you get to it. I think you got to it. continuing, other people would have given up. You're still ticking. So that's awesome. Now, if someone wants to, lend you guys some money, get involved with your projects, what should they do? How do they find you, Josh?
Yeah, so like I said, we're active on social media now. So I would say Instagram's probably where we are most active. We put a lot of our content on there. That's investing RN pod. So we have a podcast where we talk about some stuff also, but the Instagram is probably where you can reach out and direct message us there. So it's all one word, all lowercase, investing RN pod. And then we have a website, alldayinvestments.co.
Cool.
And that's where we do a little bit of stuff there too.
Awesome. Well, I really appreciate you stopping by. I'm always excited about the mobile home space. It's a great cash flowing asset, and you can buy. They're huge. Some of the ones in the more south you get, like you're in the kind of northern part of the states, right? Wisconsin.
Yes. Yep.
So, they're a mobile home park isn't so four season, it's kind of like it can be. There's new ones, but if you look at the like existing inventory that you can come across on some of these parks, you're wondering how they're keeping themselves warm sometimes in a Wisconsin winter. But there's 1,500 spot Florida locations. Like they go bigger and bigger and bigger as it gets warmer and warmer and warmer. So all the luck to you, Josh. I really appreciate you stopping by.
Thank you, sir. Thanks for having me again. This is a good one.
Awesome. And until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.